Unclean hands of lenders during the foreclosure frenzy of 2008 mortgage crisis. This documentary is related to the 2008 mortgage crisis, which triggered the Great Recession. The crisis lasted roughly through 2014, or about a 6 to 7 year period of massive economic downturn, where millions lost their jobs and homes. It stemmed from a housing bubble fueled by risky subprime mortgages and complex financial products, like mortgage-backed securities, or MBS, ultimately leading to a global financial crisis and economic downturn. The 2008 mortgage crisis, which triggered the Great Recession, stemmed from a housing bubble fueled by risky subprime mortgages and complex financial products, ultimately leading to a global financial crisis and economic downturn. Let's break it down. What exactly is the housing bubble during that period? From the early 2000s, housing prices soared, creating a bubble, partly due to loose lending practices and low interest rates. Subprime mortgages. Banks and lenders offered mortgages to individuals with poor credit histories, creating a high-risk segment of the market. Yes, people were moving into houses whose monthly mortgage payments they could not afford. Another loan qualifying anomaly widely practiced during this period was stated income. This involved the borrowers declaring any income they want to state, and no verification was made on that income. Why did the lenders do it? The lenders who packaged high-risk loans into mortgage-backed securities, MBS, and sold them to investors received a financial incentive in the form of high fees for originating and distributing the loans. What are mortgage-backed securities, MBS? Mortgage-backed securities, MBS, are debt obligations that represent claims to the cash flows from pools of mortgage loans, most commonly on residential property. These securities, bundles of mortgages, were sold to investors, spreading the risk of mortgage defaults throughout the financial system. The housing bubble burst. The housing bubble that preceded the 2008 mortgage crisis peaked in early 2006, with declines accelerating in 2007 and the subprime mortgage industry collapsing in 2007 and 2008. When housing prices began to fall, many borrowers defaulted on their mortgages, leading to a crisis in the financial system. Financial institutions' failures. Major financial institutions like Lehman Brothers faced bankruptcy or required bailouts as their investments in MBS became worthless. The Great Recession, triggered by the 2008 mortgage crisis, was a widespread global economic downturn that led to a significant increase in unemployment, with the U.S. unemployment rate peaking at 10% in October 2009. The U.S. economy entered a deep recession, with high unemployment, falling stock prices, and a decline in overall economic activity. The crisis spread to other countries, leading to a global recession and economic instability. Recovery and reforms. The economy began to recover in 2010, but the effects of the crisis were felt for several years, with unemployment remaining high and the housing market taking time to stabilize. The crisis led to significant financial reforms, including the Dodd-Frank Act, aimed at preventing future crises. Against this backdrop, on February 10, 2006, a husband and wife couple executed a negotiable promissory note and a security interest in the form of a mortgage. This document was filed in the official records of Shelby County, AL. The original lender of the promissory note and beneficiary of the mortgage is Hometown Mortgage Services, Inc., with the funds being provided by GMAC. MERS, or Mortgage Electronic Registration Systems, Inc., is not named as the payee of the note, but is named as acting solely as a nominee for the lender as the beneficiary of the security interest or trust deed. Securitization, the note. The note, or promissory note, was sold, transferred, assigned, and securitized. Remember the MBS we discussed previously? Into the Ramp Series 2006 RZ3 Trust, with a closing date of on or about August 3, 2006. No notarized bill of sale, note of endorsement, and verifiable proof of funds were provided for review and examiner. Therefore, recommends production and review of the then notarized bill of sale, note endorsement, and verifiable proof of funds prior to the closing date. Chain of missing documents. On August 3, 2006, or 6 months after the couple took out the loan, the underlying note was transferred to MBS Ramp Series 2006 RZ3. The path to get to Ramp Series 2006 R3 Trust is as follows. Hometown Mortgage sells to Sponsor Residential Funding, owned by GMAC. Residential Funding sells to Depositor Residential Mortgage Products, Inc., a subsidiary of Residential Capital or ResCap, which was a subsidiary of GMAC. Residential Mortgage Products, Inc. places sells to the trust. Ramp Series 2006 RZ3. Note: only Residential Mortgage Products, Inc. RMP can place assets into the trust. As indicated above, no notarized bill of sale, verifiable proof of funds, or note endorsement was ever provided for review for each step in the chain of events. 1. Hometown Mortgage Services to Residential Funding, Sponsor. 2. To Depositor Residential Mortgage Products, Inc. 3. To the Trust. Ramp. Series 2006 RZ3. There is no proof or documentary evidence that an actual purchase took place by the above parties, as there are no documents to verify them. As such, no rightful foreclosure can take place until the actual purchase can be verified to prove transfer of ownership. First assignment of mortgage, June 7, 2010. The machinations begin. The husband and wife couple continued paying on their mortgage. On June 07, 2010, or roughly 4 years after the trust closed, which means no other asset can be placed into as specified by the trust's pooling and servicing agreement, an assignment of mortgage was recorded in the official records, Shelby County, AL. The recording was under instrument number XK66XAA110 in favor of, or to, the Bank of New York Mellon Trust Company, National Association, FKA, the Bank of New York Trust Company, NA, as successor to JP Morgan Chase Bank, NA, as trustee for Ramp Series 2006 RZ3. Let's provide you some background on MERS, Mortgage Electronic Registration Systems, Inc. MERS is an American privately held corporation. MERS is a separate and distinct corporation that serves as a nominee on mortgages and is owned by holding company MERS Corp Holdings, Inc., which owns and operates an electronic registry known as the MERS system, which is designed to track servicing rights and ownership of mortgages in the United States. While MERS, Mortgage Electronic Registration System, acts as a nominee for lenders and tracks mortgage transfers, it does not own the underlying debt or hold the promissory note, nor does it have any financial connection to the mortgages it manages. Nominee role. MERS functions as a nominee for the lender, meaning it acts on their behalf in recording mortgage assignments in county land records. MERS does not own the mortgage loan or the underlying debt. It simply tracks ownership and servicing rights. Back to BNYM. First assignment of mortgage. This assignment of mortgage executed by Mortgage Electronic Services, Inc., MERS, as nominee for the lender, Hometown Mortgage Services, was signed by Colleen McCulloch, purporting to be an assistant secretary and vice president of Mortgage Electronic Registration Systems, Inc. No disclosure was made of the true nature of McCulloch's employment with MERS. She appeared to be an employee of the legal firm Sirote and Permit. It is not clear what her status is signing or MERS and assigning and transferring this mortgage. Flaw in the first assignment of mortgage that BNYM would later discover and try to do over. Note that the assignment of mortgage was to the Bank of New York Mellon Company, BNYM, National Association FKA, the Bank of New York Trust Company, NA, and not to Trust, which owns the note. By the way, at this time the trust is closed, i.e. no more assets can be added since August 3, 2006. The reason this is flawed is because to foreclose, the foreclosing party must prove that they own a debt or promissory note that is overdue. In this case, the note is owned by the trust, Ramp Series 2006 RZ3, and so BNYM, which owns the mortgage, by virtue of this first assignment of mortgage, has no defaulted note that it owns to foreclose on. What BNYM had was a mortgage with no note. And what the trust had was a note with no collateral or security, essentially a personal loan. On part 2 of this 3-part series, we will tackle the machinations and the fraudulent and illegal paperwork that BNYM appears to have fabricated to come up with the second assignment of mortgage. We will also look into the foreclosure paperwork mills during the foreclosure frenzy that followed the 2008 mortgage crisis, where millions lost their homes, presumably from illegal foreclosures. We will also cover the 2012 bankruptcy settlement that Residential Capital, ResCap, and its affiliates for $8.7 billion bankruptcy settlement, institutional investors, RMBS holders, to resolve claims related to 392 securitization trusts created between 2004 and 2007. The RAMP Series 2006 to RZ3 Trust is one of these trusts that received hundreds of millions of dollars from this $8.7 billion settlement. So, essentially, the loans in the Trust Series 2006 RZ3 have been paid off. The foreclosure action related to this couple in this documentary appears to be an exercise in double-dipping. Do you have similar story? Let us know in the comments how you fought off their fraudulent foreclosure.